Hey guys, let's talk RSI. RSI means relative strength index. It's an indicator that will help you identify overbought and oversold levels. We're going to look at the RSI and only the RSI. We're going to talk about a profitable strategy only using the RSI with a little bit of technical analysis and price action. And if you couple that together, you can find your levels. You can be confident in your entry and your exit. So if you like that, I want you guys to give me a thumbs up. Don't forget to like and subscribe if you haven't already. And let's go ahead and rock this. I'm serious, guys. Let's get it.
Yeah, I know I got problems, and I don't know where to go. I don't want to put the blame on you.
All right, guys, let's get right into it. We're looking at Euro Chef, and I want you to practice this as soon as you finish this recording, okay? Take a chart, any pair, and put this to the test. I want you to pull up your RSI indicator. If you don't know how, you would go to indicators here, type in RSI or relative strength index. It's just like this here. Click it, and you'll be all set. No need to touch any settings. You'll keep the same settings as it is, all right? Next thing you're going to do is go to the daily chart on any chart, and I want you to find one thing here. I want you to find price close to or at the 70 level, and I want you to look at it headed downward. You see this hook here? That's what I want you to see. Now, once you see that and you're on the daily time frame, it is almost certainty that you can catch a couple hundred pips, at least a minimum of 100 pips, depending on how long you plan on staying in the trade. Now, this is swing trading. Swing trading means you're going to stay in the trade for at least 2 days or more, and you have to be patient. So if price goes against you for a little bit, don't worry about it. If you're in profit and then it comes back up a bit, don't worry about it. You have to trust the process, okay? So first, you're going to go on your RSI. You're going to look for the 70 level here, right here, and then the 30 level. So the 70 level means that it's overbought, and the 30 level means that price is oversold, okay? Once you see it start curving down, here's your moving average line here. So my moving average line is this yellow line here. And so what I want to do is execute the trade right then and there. So the candle up here is correlated with this here, the exact same thing. So that's why I have my crosshairs here. You see my crosshair, it is right here. That's exactly what price is doing, and it's following it, okay? So I would take this trade here. And one or two things, you can take the trade until price comes down to your moving average and cross it just a bit and take profit and then exit. And so if I did that, I would get about 75 to 80 pips or so. Now, some people would take that price all the way down to the bottom to maybe halfway mark or maybe the 30 level, and it's completely up to you. However, to be cautious, I would take it to my moving average line and let it cross just a bit and then exit. Now, this only works for the daily time frame if you're looking to swing trade and get a couple hundred pips. Now, you don't want to only use the RSI by itself. You want to couple it with price action. So you want to be able to determine where is your support and your resistance zone. And sometimes it takes a little bit of practice. However, you can even use the RSI to determine where your support and resistance zone is at. Hey guys, I want to take this time to say thank you for watching. Don't forget to like, subscribe, and comment if you haven't already. And I want to emphasize on the comment and the likes. Oftentimes we'll get communication from you either through our academy or through email or any other means of communication. And you will say you enjoyed a video, except we don't really see the comments sometimes. So if you can do that, please comment only if you receive value from this and if you're really understanding and receiving the education that we provide you. Again, we thank you guys for watching. Don't forget to like, subscribe, and comment. Back to the video. Very easy. So here's a way to do it. You're going to look at points. You're going to look for points here on your RSI. Here's a point here. Here's a point here. We have a point here. So you can do that. I'm going to look at this point here as my resistance zone. And that's why I mark this here as resistance, okay? I have another point right here. If I go ahead and look at this, this will be my minor resistance zone right here. And I can bring this all the way across, and you can see how it correlates with all of the support zones here. So I can see it around here, here, this area right here. This is my minor resistance zone. So I can do that. And once I do that and couple it with the RSI, then the rest is golden. This is a very simple strategy, guys. So number one, I use my RSI to determine my support and resistance zone. Number two, I'm using my RSI to determine when I'm going to buy for a swing trade on the daily time frame. Now let's go to the lower time frame here. Let's just say the 4-hour time frame. And so I'm going to wait for my RSI to show here. And so my RSI is clearly above 70 here. So one thing you want to do is you want to wait. If price goes above 70, such as this, you don't want to enter. You want to only enter when it starts to curve down like this here. So you can see how we have this hill, this mountain, whatever you want to call it, and then price starts to curve. And as it curves, the closer it gets to my yellow MA line is when I'm going to trade. That only works if it's above 70. So if it's above 70, I'm waiting for it to curve, wait till it to get close to my MA because my MA is climbing up as well. Then I would enter right here. That's exactly where I would enter, around this area right here. And I can take it down to at least middle, which is around the 50 zone, and exit. So that will be more of an intraday trade, okay? It can take maybe a whole day, maybe 8 hours, maybe even 4 hours, depending on the volatility of that pair. And to confirm, I've also marked this as my resistance zone. So not only is that my resistance zone, but my RSI has also helped me as confluence. Now let's go to the lower time frame. Let's say the hour time frame. All right. So now what I'm looking for is that same thing. I want to see when price gets close to 70, and sometimes it will get close to 70 and may not even touch 70. But here's a part where price shot up. It went above 70. I'm not entering because it didn't start to curve. Once it's above 70, I'm waiting for price to get closer to my MA. Once it gets closer to my MA, I'm entering right here. If I follow my crosshairs up, I would have entered right here. All right, now each candlestick represents an hour, so you may wait. This is also intraday. Sometimes this can be a scalp, but the lower the time frame, such as the 15-minute or the 5-minute, you can scalp it, get in and get out. There may be times where you're on the daily time frame and everything is ready and set. It's pointing down, then you would sell. But then if you go to the lower time frame, like the 15-minute, it may be pointing up. Now, if something like that happens, the lower time frame always wins in the short term. So if I'm on the 15-minute time frame and it's at the 30 and it's pointing up, but my daily is pointing down, that simply means I can scalp for a buy. But however, if I'm long-term trading, I can enter now for a sell. So how that would work is if I were to intraday trade, that price may go against me a bit before it heads down. So you can see how this can work for every single trader, if you're a scalper, intraday trader, or a swing trader. Now, like I said, you want to couple this with price action trading. You want to couple this with your support and resistance line. It's not going to work unless you know where your support and resistance areas is. And then you can also use your RSI to help you discover your support and resistance zone. So let's go ahead and let's just try GBP Chef, for example. Let's go to the daily time frame. And so here we are on the daily time frame. I can see that price is right at the 70 mark. It starts to curve down. I would enter right here. This is where price is at. It's correlating with price and the RSI. I would enter right there. And you can see how price hasn't even crossed my yellow MA line yet, which means that there's more downside movement ready to go. And I would exit at least halfway or when it crosses. So if I get my measuring tool from the top of this price here to where how low it went is 122 pips. It started to pull up. It's about 96 pips in profit. But when I look at my RSI, I know price is still overbought and it has some time to come down, right? It may come up a bit and it may come down, but overall, since I'm on the daily time frame and on swing trading, price is ultimately going to continue to come down. So that's how it works, guys. Very simple strategy. I wanted to provide this to you. This is something that I use that I don't really talk about often. Discovering my levels, going back to the daily time frame. This is my resistance zone. I marked my resistance zone based on this peak here, going straight across, and it just so happened that this peak here matches up with this peak when price abruptly rejected to the downside, right? And guess what? Price revisited here. It just so happened to be above 70, and I went ahead and sold. Now I can sell again to the middle around 50 or whenever price crosses my MA line. Or if you're just looking at the chart, you can sell until price comes down to your support line or your support trend line here as well, or your support horizontal line. Let me know in the comments, what do you think about this? If this is something you've known already, or if this is something that can help you out. Again, I challenge you to look at every single chart on any time frame, throw on the RSI at its normal settings, go back in time and look when price had reached close to the 70 level and watch it cross the line and drop. When it gets close to the 30 level, cross its line and it rises. Now it's up to you depending on how long you want to stay in a trade, but if it's at the 30 level, it's going to rise. If it's at the 70 level, it's going to drop. Again, the next rule, if price is above 70 and it's around 72, 75, maybe even 80, you still don't want to sell. You want to wait for price to come down and your MA starts to cross. That's when you get in. All right, guys. Thumbs up, like it, share it if you really appreciate it. And our job is to help you to understand trading in as simple as possible. I'll see you in the next video. God bless.